Hello, this is Kathleen Jeffrey. Last week I reported that on March 31, mortgage insurer Genworth Financial released an update on their website stating Norfolk, Plymouth, and Suffolk counties in Massachusetts have all been placed on the declining distressed market list. This means some buyers in the market for a house in these regions may encounter stricter guidelines to qualify for a mortgage, as most buyers are required to obtain mortgage insurance when purchasing a home in which they are putting down less than 20%. Yesterday I had a conversation with Terry Souer of Genworth Financial.
Okay, you're on. If you could just say your name.
Yeah, I'm Terry Souers, and I'm a spokesman for Genworth Mortgage Insurance.
Wonderful. And I'm talking to you today because Plymouth County in Massachusetts is one of the communities that has been put on the property list. Mm-hmm. Can you just explain what that's all about and how long it's been out there?
Well, let me start by saying that Genworth Mortgage Insurance is committed, and this is important, to providing safe, secure options for home buyers looking for a low down payment mortgage. But at the same time, we think it's important that we balance this commitment with prudent underwriting standards and current and projected economic conditions, as anybody who has read the newspapers over the past 6+ months know, are not the best in the mortgage industry. So we feel that it's important to evaluate the various loans based on current and projected market conditions, and it seems now prudent that we have tightened our underwriting standards to make sure that both we and, most importantly, the borrower gets into a loan that is the appropriate loan for that person under these conditions.
Do you have any idea how long it's actually been in process for?
We initially put this declining distressed market list up on our website and informed our lender partners about it at the beginning of this year of 2008. I believe the restrictions went into effect on January the 7th, if I'm not mistaken.
Can you tell me if a region makes it onto the list, such as Plymouth County in Massachusetts, is it something that's reevaluated over a certain period of time and they can somehow make it off the list?
We reevaluate the MSAs that are on that list on a quarterly basis. We do so using a combination of external data provided by economy.com.
Okay.
And internal Genworth metrics that include things like forecasted home price appreciation, estimates of home price decline from peak to trough in the various markets. If they exceed 10%, that's one of the things that we would consider as we decide whether or not a region is put on the list. Let me say this if I can.
Sure.
Pulling back away from these very, very, very low down payment loans, 100% down, 3% down, isn't a question of providing access to homeowners who want to do low down payment loans. It's really a question of responsibility. We're still insuring loans with up to 97% loan-to-value in some markets, and we'll do up to 95% loan-to-value in some softening markets. Low-down payment mortgage loans with mortgage insurance are still available, and that's something that people really ought to know. There's been some misapprehension out there that we're not insuring loans. We are, but in a market where some of the predictions out there by economists are saying that the peak to trough decline in home price appreciation is going to be over 15% over the coming year or so. And we simply believe that it's unfair to put a borrower in a house in which they could have negative equity before the curtains were hung.
Well, let me ask this question. If you happen to be, say you're a young couple, you're in the Plymouth County area, you're looking at a home and you have a lot of money in the bank, and for whatever reason you want to put less than 5% down, and you both have good jobs, do you know Genworth makes any exceptions at all if somebody just, has exceptional credit and what have you, that they wouldn't have to put the 5% down, or is it if you are in that region, you have to put that 5% down?
I would advise a couple who wants to make a low down payment to really think about the fact that the difference between 3% down and 5% down is not that large, and that we believe that they probably will be better served if they save up or take that extra 2% out of the money that they do have and put it down. We found that people who make down payments 5% or more are more apt to be in a position to buy and afford the house they're looking at, to not overbuy. And if times get tough, they're more apt to stick with it. Foreclosure is something that you just don't want to get into. You don't want to overbuy and find that you can't afford to make your payments. I will say that Genworth, for one, and we think we're probably preeminent among mortgage insurers in this regard, does have a very, very, very proactive policy of helping people who get in trouble stay in their homes with different kinds of workouts. Obviously, we hope and they hope that they don't get into the situation in the first place. So don't overbuy. But if you find yourself in trouble, we're there to help, and we will work with them to keep them in the house.
That's great. I have one other question. I know that there are other mortgage insurers out there, and they have their own distress lists and what have you. And for instance, I'm just going to use another example. There's another company, PMI US, and they have the distress list, but they don't show the same region of Plymouth County as being on a distress list. So the question is, how close do these companies usually follow each other? For instance, if we made one person's list, is there a good chance that next quarter we're going to make the other person's list?
It's hard for me to speak for what the competitors have on their lists. There are some areas of the country that are pretty much, people are pretty much unanimous in believing that they are in a declining or distressed state. Sure, Arizona, Florida, right. We have, as I said earlier, we've got a whole host of factors that we put into determining what areas should go on that list. PMIs may be somewhat different. I would say also that mortgage insurance companies do have different criteria as to the amount of loans they will make in the distressed areas. I think I can't really speak for the competition, although I believe this is true. I think ours is relatively generous. I read the other day that one of our competitors had tightened their down payment requirements substantially more, and I believe that they may not be making loans unless you've got at least a 10% down payment.
Oh, 10%, okay.
Yeah.
Thank you so much.
Sure thing. Glad to be of help.
Thanks. Bye-bye.
Bye.